According to CoinMarketCap, Bitcoin's price climbed above the $20,000 level as of June 21st after falling to its lowest of $17,708 on Sunday, its lowest position since December 2020. However, two significant incidents occurred over the last week as of June 18th. One, the worldwide cryptocurrency market cap dropped below $1 trillion. It peaked at $3 trillion in October 2021 and has fallen below levels since in January 2018. Cryptocurrencies have not only halved from pre-COVID times, but are now at a 4.5-year low. As we all know, cryptocurrency, like the stock market, is highly volatile. Volatility is an aspect of price movements, even with the recent upward trend, isn't it? So why is the crypto market fall making headlines? Why is there so much supposition? Before we begin, don't forget to smash that like button and comment in the section below if you have any contributions. And without further delays, let's dive in. As of June 21st, 2022, below is where things stand in the crypto market. At the time of making this video, the world's largest cryptocurrency, Bitcoin, had gained more than 7%, trading at $20,504. Ethereum has risen 14% in the last 24 hours after falling to $896, and it was trading at $1,125 at the time of this video. The cryptocurrency market has fallen below $1 trillion for the 7th day as fears of a crypto winter spread. The problematic hedge fund 3 Arrows Capital reportedly had trading positions liquidated by various major cryptocurrency exchanges after falling to make margin calls, and investor funds in cryptocurrency lender Celsius Network remain locked. The market has indeed had one of the greatest crashes in the last 2 weeks in June. The world's most popular digital currency, Bitcoin, plummeted below $20,000 and even approached $18,000 on the 18th of June, its lowest level since December 2020. For the first time since January 2021, the global cryptocurrency market cap has fallen below $1 trillion. In addition, statements from global IT and finance heavyweights are pouring gasoline on the fire. Microsoft co-founder Bill Gates recently remarked that the concept of NFT and crypto is built entirely on the greater fool hypotheses, and that he prefers investing in commodities that are produced. DoubleLine Capital CEO Jeffrey Gundlach, dubbed the Bond King, says he would not be surprised if Bitcoin fell to $10,000. Before we jump to any conclusions about the market and fall into speculative guesswork, we must first comprehend it and grasp the facts. Is this a new phenomenon? Certainly not. This is not a new development in the industry. It evolves in cycles, like all industries, alternating between movements of great activity and crypto winters. Although digital assets have only been around for a short time, those who follow the market know that it has seen a sharp rise and fall in that time. For example, the price of Bitcoin increased by 125% in 2016. It had another increase in 2017, this time by more than 2,000%. Following that, the price of this coin fell once more. Bitcoin continued to achieve new all-time highs in 2021. According to Andreessen Horowitz' 2022 State of Crypto Analysis, we are in the midst of the fourth price innovation cycle. There have been 3 rounds so far, according to Chris Dixon and Eddie Lazarin. The first reached its peak in 2011, the second in 2013, and the third in 2017. These cycles appear chaotic, but they have an underlying order that can be approximately described as the price of Bitcoin as well as other crypto assets rises, new interest and internet activity develop, more people become engaged, contributing new ideas and code, projects and startups emerge, product launches excite more people, finally resulting in the next cycle. Is it a regular crash when stablecoins become uncertain? Most people would argue that this isn't your typical crash. The crypto market had a full collapse, while the crypto market's volatility is well known. It was far more severe this time, as evidenced by the collapse of stablecoins. Stablecoins are cryptocurrency assets that have a fixed value. They are typically tied to a stable-priced asset, such as a prominent fiat currency like the US dollar, or exchange-traded commodities like valuable metals and so on. The largest stablecoins were Terra USD and Tether USDT. The rise and fall of these stablecoins have cast significant doubt on the market. Terra USD, Luna, has been the center of attention. Terra's Luna had the trust of its investors. However, it was worth less than a cent within a few days of the fall. Terra, its sibling currency, was worth 6 cents and was intended to be fixed to $1 as a stablecoin. Tether's market worth was under $4.1 billion in 2020. In May 2022, it attained an all-time high market valuation of more than $83 billion. These tokens are well known for their value and efficiency. They float around the blockchain at the same rate as other digital currencies. These tokens were intended to be linked to one another with a corresponding fiat currency. For example, 1 USD is equal to 1 USD. Tether, like Terra, experienced a similar crash. Tether investors have removed $10 billion by May 23, 2022 following the crash. Similarly, many altcoins have been seriously hurt by the crash and may not survive, but one must look beyond Bitcoin to find solid investment opportunities in the digital class. Nevertheless, cryptocurrency is the currency of the future. In numerous respects, Web 3.0 will be a game changer. This transformative phase believes in empowering people and society instead of a corporate or government-owned future. Beginning in 2005, the second phase of the internet was defined by huge corporations and technology firms as data owners who segregated and consolidated services. Web 3, on the other hand, enables a collectively owned future. It discusses new methods to hold, trade, and invest money, hence fueling new economic opportunities. Existing fiat currencies may become obsolete at some point in the future since they cannot provide solutions to several challenges. Cryptocurrencies are the future money. We are currently at the start of this phase, and many people may find it difficult to accept this challenge. Development and change are not without cost, and Web 3.0 is no exception. Is the crypto bear market going to persist forever? The market and investors are going through a difficult period. To provide the necessary push, the ecosystem requires some assistance from regulatory agencies, lawmakers, and influencers. India has a big crypto community, both those who have invested and those who are interested in the industry. While global volatility has made them nervous, the Indian government's ongoing bitter feelings towards cryptocurrencies, lack of policy, clarity, and the increased taxation for Indian crypto investors will all hurt the development of an encouraging ecosystem for entrepreneurs and investors. Many analysts anticipate the market will rise. Media stories such as Binance Exchange purchasing 100,000 Bitcoin at $19,176 per coin a few days ago may provide some relief to investors. To paraphrase Chris Dixon and Eddie Lazarin once more, in certain industries, prices are trailing gauge of performance. In crypto, they are leading indicator. Prices are a draw. The crypto winter will not endure forever. The gloomy crypto market is here to stay for the foreseeable future, and investors should cling to their investments. Nonetheless, the value and significance of digital assets cannot be overstated, and it is not an exaggeration to argue that they will play a critical role in the future of finance. Economic conditions serve as excellent filters. Today's volatile crypto market conditions appear difficult to overcome. On the other side, these market conditions act as a sort of filter, weeding out ventures that were not sturdy in the first place. If the market recovers, as many crypto analysts suggest it will, the sector will be left with initiatives with significant growth potential. In this regard, refocusing on utility is critical and the only way ahead for the crypto business. To conclude, we must emphasize that cryptocurrency and other digital assets have intrinsic worth and can act as an excellent hedge in times of crisis. The issue is that relatively few individuals are familiar with cryptocurrency and the market. Experts predict that the next bull cycle will be more stable, durable, and long-lasting. It was critical to rebuild faith and trust in the ecosystem. Discipline is essential. Do you believe the cryptocurrency market will survive the current downturn, with the market value falling below $1 trillion? Let's have your thoughts down, and don't forget to subscribe, like, and share the video. Thank you for watching. We'll see you in the next video.